So we definitely got some just insane stuff currently happening to Clover Health Investments stock again, especially now after gapping up a literally mind-blowing almost 43% to some major highs at almost $11 since the recent drops of about 16%, however right to the massive support level we talked about last time from the pullbacks after the astonishing 458% initial jumps that occurred just a few months ago. But now sitting at under $10 again after some somewhat significant rejections from those gigantic new spikes, as well as there still being some crucial aspects that need to be considered here left. What we are going to do today is give you an updated insight into what is happening to Clover Health stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so let's start talking about the company. And as said in the beginning, there certainly still are some extremely important factors to consider before making any buy decision on the stock even despite the major recent gaps, including the second quarter earnings as well as several critical fundamentals, product info and short squeeze data, which we'll look at in a moment. But because this also is one of the areas in which the company actually has experienced some impressive improvements recently, especially as we'll see in the earnings report which we'll look at in a moment, we'll certainly have to start with one of the most essential aspects of Clover Health and the business behind it, its flagship product, the Clover Assistant. And as you probably know, the company essentially offers a highly trained artificial platform, known as the Clover Assistant, to dramatically improve treatment for the now even larger than ever customer group focusing primarily on Medicare-eligible patients, while allowing doctors to do a lot less work, resulting in some obvious but huge cost savings. Furthermore, the platform continues to astound with its great scalability, which is extremely difficult to achieve with conventional staff with the fantastic figures the assistant has been able to generate recently, indicating some significant growth over previous months, literally already showing a result of these major enhancements. Clover Assistant now, for example, has almost 100,000 lives under its management, a 230% increase when compared on a year-over-year basis. And in addition to that, it is projected to be able to bring in over $1 billion in just a single year of 2021 alone. And, despite the fact that we went over this in greater detail in the previous video, we'll still have to quickly talk about the new extremely important earnings, which are also showing off some amazing numbers this quarter, starting with a sales increase of more than 140% compared to the second quarter of 2020, while now sitting at a whopping $412 million for only the second quarter of this year. Literally, even if we just take a look at the first one of 2021, which had already generated an incredible $200 million in sales, we can witness tremendous 100% increases. Clover subsequently reinvested heavily in the company, including a whopping $107 million just for new employees and general expenses with the additional cash. But, and we said that before, there's another thing that distinguishes Clover from a lot of its competitors: the recent significant jumps in price. And it literally gapped up more than 450% on exceptionally high volume, making it one of the most talked about Medicare Advantage insurers. And especially retail traders then have massively hyped up the stock on sites like Wall Street Bets, owing to the substantial short squeeze potential it had before breaking out, with short interest exceeding 43% at the time of first breaking out. But it's the fact that short interest is still extraordinarily high right now that makes Clover Health such an appealing buy once more, especially after recent 64% pullbacks prior to recent advances. And with the price then having gapped up massively to the recent highs again, some recoveries have literally already started, leaving us however at some still pretty good entry points due to the then occurred pullbacks. So if the company is now also able to continue to meet its expectations in the reported revenue, the stock definitely has a ton of upside potential. Alright, if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot, and see you next time.